Okay, guys, good morning. How are we? Um, First of all, now with the inventory, we are done halfway through. I think we talked about the inventory, didn't we? So, how important is it? Usually, you get about 20% OEC, right? 20 marks. Around 20 marks, you get for inventory, right? So we are done halfway through. We did the inventory cards, identified course and FIFO, but still we have some more safe tests to be done. We have to do it. If we have time today, do it. We'll try to finish this one today. And then we have to do one module for the inventory, right? So today we are doing product and period costing. Yeah, let's start.
How many AOSs have we done?
AOSs around 2. Yeah. Still, we are not done with inventory, so we are, when we are done with inventory, we are done too. Yes. Okay, guys. Now, some of this costing we have done in unit 2, right? So we call cost of inventory, for example, freighting, cartaging, and so on, right? So we'll see how we are going to allocate these costs, right, into individual units of inventory. Okay. First, we take down the cost of inventory. Cost of inventory includes all the costs incurred to bring inventory into a, yes, what is it? Yes, into a condition and location. Ready for? Say. Right? We have some examples of inventory, guys. The first one is, what is it? Suppliers price. How much our supplier charges us for each unit of inventory. Right? Next one is freight in slash cartage in. Right? Next one, modification costs. Then customs slash import. Duties. What do you mean by duties, guys? A job. That's duties. Yeah. Yeah, job. Now here, yeah, what is it? There are some students who have done economics. Yes, tax. Tax. Duties here is tax. Right? You can say customs. Yeah, tariff. Customs duties or import duties. You can say customs tax or import tax, same thing. Right? Any other buying expense? Right. Okay, guys. Do you want to read this part? I'll explain. Okay, guys. What is cost of inventory? For the cost incurred is in order to bring the inventory into a condition and location where it is ready for sale. Right? Okay. So without purchasing the inventory, without bringing them into the store, can we sell them? Usually we can't sell this, so we have to bring them, and then only the customers will come and purchase, right? So everything that we have incurred up until then, we have to get them as cost of inventory, right? So main part is what is it? Supplier's price, right? Supplier's price, and then freight in or cartage in, right? Usually we call freight if we are bringing them through the ship, right? Freight in, or maybe through flight, right? Then cartaging, of course, like transporting into the business, right? Modification costs, and if you are paying any taxes, right? To purchase them, we have to include them. And also sometimes we might pay insurance as well, insurance, right? Not the insurance for the business, insurance for the inventory. Sometimes it is paid by the supplier and they charge it, they include it in the supplier's price. Otherwise, we have to pay for it. That depends on the agreement with the supplier, how we are bringing the inventory. So there are some terms, relating to shipping. They are not important to us, right? If you are going to specialize in that area, you might learn it. Otherwise, not that important. Right? Then any other buying expense, right? Actually, we can categorize all of these like from 1 to 5. All of them are, 1 to 4. All of them are buying expenses. Yes. Technically, they are buying expenses, right? So let's say if we, yes.
What's the modification?
Modification, if we modify it before, let's say before we sell it, maybe a car or any other item, right? Before we sell it, we modify it.
Like change the product to it.
Yes, we add, parts. It is a car, we can hang, different parts, right? So all of them are modification. Okay. So, yeah. So let's say we have spent money to deliver the product to the customer. Can we include it here?
No.
No?
No.
Sure. Yeah, why not?
This is not bringing into.
Yes, it is not bringing it. It is selling, right? If we had like cartage out or freight out, right? We can't include them in the cost of inventory, right? We can't include them in the cost of inventory. Make sense? Right? Anybody has a question relating to this one, cost of inventory? Right? You want me to give an example for inventory? All of you are okay, right? Because there can be some students who haven't done one too, right? Yeah, all of you are okay with the inventory? Yeah. Well, we'll do examples, then we'll realize further. Right. So why is it important for us to calculate the cost price of inventory accurately? Firstly,
So you like put on more customer?
yes, very good. To set our selling price correctly. Otherwise, we are to see, then we might be selling it at a loss, right? So then we need to set the markup and then selling price, and then for us to calculate the cost of sales and then net profit, and then value them in the balance sheet, right? Okay. Now, guys, there are two main parts of the inventory. Cost of inventory. Yeah. Anybody can tell me? Product cost and yeah, this is the one. Product cost and period cost. Okay. So we'll write it. So the first one is product cost. Right. But two is period cost. This condition and location, sometimes we can call condition or location as well. Okay, it doesn't have to be both. Even one is fine, right?
Okay, why is it only be one or the other? How can it be both?
Yeah, it doesn't have to be both. Even one is fine. So sometimes, like for example, as he asked, modification cost. So is it a condition or location? Condition. So even one condition is satisfied, that's fine. So uh, we can say condition or location, condition and location. No? Yeah. However, remember only one thing should be satisfied of these two. Right? Okay. So then, guys, are these the same thing? Product cost and period cost? No. What is the difference?
Product cost can be allocated to individual units of inventory. Period costs cannot be allocated.
We cannot. Yeah. So then, what is important is, guys, this one cannot be allocated. Right? We can't allocate into individual units of inventory. Right? But the first half is the same. So regardless, they are the costs that have been incurred to bring the inventory into condition or location ready for sale. Right? Okay. Do you need the examples for this? Yeah. What are the examples for product cost? The best example I can tell you is suppliers price. Why? Definitely, we can allocate into individual units. Period cost. That also there's only one guys, right? Definite examples, right? Insurance of inventory.
They say the insurance of inventory is on like all the inventory, not just one.
No, just for that particular shipment. That's why we are actually, I mean, sometimes like how it happens is like businesses they do it periodically because insurance is right. Usually it is paid for a period, right? So then there is a kind of estimate how much of inventory they are bringing in a given period, so that for that period they are paying. Otherwise, for every shipment they have to pay for it, right? Sometimes they can pay for the shipment as well, but usually in our study designs, insurance of inventory, we identify it as a periodic cost. Okay, right. Okay, guys, you want to read that part? The last paragraph. What? Make sense? Yeah. And we'll do, yeah.
So the emphasis of it's less than 1%, so we don't count it as a cost.
We count it as a cost, Devendu, but we don't treat it as a product cost. Even if it is, even if we can identify it to individual units of inventory using a logical basis. Even if we know definitely it's a product cost, we can identify it as a part of the individual cost, but still we will identify it as insignificant, not important. Yep. So, make sense? I'll explain it, but we'll do some maths as well. Okay. Right. I'll do a formula. This formula actually developed by me, but it makes sense, you know. This one, remember? Yeah. Don't write this one in the exam though. Why is that? Just for your information. Don't write because that part 1% thing. Don't write. There is no such a thing. Okay, in textbook. Then because then you can ask me like what the threshold, what's the level is. Then that's why I have put it as 1%. Again, I have seen like some school teachers also, you know, one teacher in my course and somewhere, yeah, had to use the same thing. Yeah, 1% because according to the experience. Otherwise, you know, how would you measure it in the exam, right? If it is immaterial, yeah, you don't know, you never know, right? So it is really subjective. So this one, just for your information, don't write in the exam, right? To figure out if it is a product or period cost. I mean, to test the materiality, right? Okay, guys, why I took this 1% is, right, there is definitely a basis because in BCE there was a question, right, that they have taken a particular product cost as period cost because it is not material enough. Then when I calculated the percentage is less than 1% of the invoice price. So that's what I'm saying. Okay. Right. Okay. So does this make sense again?
What if it's at fixed?
Yeah, then it is. Okay. Yeah, if it is, this one is less than, okay? This sign is less than sign, right? Yeah. This one is less than sign. Right. Now, what is this story, guys? Even if we can say a particular particular cost is product cost, that means we can identify it per unit basis, right? Still, we will treat it as not material enough. Why? Because if it is less than 1% from the invoice price or something like that. Okay. Does that make sense? Right. Then, now we are coming to the double entries. Right? Up until here, we did the theory. Right? I could have printed this one answer, but this one is important because otherwise you guys don't understand the concept. If you don't write the note, right? I could have saved time, but again, you know, what is more important is you understand the concept, right? Double entries for the product cost. What's the double entry for product cost? Yes. Anybody can try.
Debit product cost.
Debit product cost.
Yeah.
Debit GST.
Great.
Trade bank. Yes, the last two are correct. First one is debit inventory. Very good. Yeah, you don't have an account called product cost, right? All the product costs are debited to the inventory.
Don't you combine
Combine what?
don't you combine the product cost and the inventory? Don't you combine them?
Yeah, product cost is converted to inventory.
Oh.
Product cost is what we identify as inventory. Yeah. Credit the bank's cash account payable. If it is paid by cash, we credit to the bank. Otherwise, if it is on credit, accounts payable.
So, wait, so like you know how you said the supplier's price is like a product cost? Wait, it's just like no, it's fine. But what's another product cost like other than supplier price?
Yeah, other than supplier price, actually, that's a good question, right? Any of these costs, as long as they can be allocated to individual units of inventory, they will be product cost. So as a result, we will debit into the inventory account. Yeah, any cost that we can identify per unit basis of inventory. Yeah.
So then like the product, the inventory cost referred to the inventory account. would be
Yes. After
After allocating the product cost?
yes, that's also good point. Right? That is what I'm going to show you later. Once we are done with the theory, I'll show you how we are going to record in the inventory card. Okay.
Let's say if you bought the product like inventory, and you do have some modifications on it, you just like bring it to sellable condition, then that would be like debit inventory.
Yeah, debit inventory as long as we satisfy the condition. Which condition? Yeah, allocating to individual units.
So when you recording income statement, like that modification cost will go under cost of sales.
Yes, as long if it was allocated to inventory, if it was a product cost, yes. So that's also a good point. So see, that's a benefit, guys. So when I explain the theory, see, I don't have to explain the rest. You guys, can figure it out. So then what happens? What is basically cost of sales, guys? Which cost? Product cost or the period cost? Product cost. As long as they have been sold, because inventory become under cost of sales when we have sold it only. Otherwise, it is sitting in the inventory account and inventory card. But if it is sold, yes, the product cost is the one that is converted to cost of sales. Then what happens to period cost?
It's cost of goods sold.
Yes, it's a part of cost of goods sold. Right? Okay. Yeah. Don't worry. If anybody didn't understand this one, we are doing questions, then you realize what we are talking. Okay. If anybody didn't understand. Right. Okay. Now this is also some theory for the product cost, and some of you already questioned these things, right? So recording product cost in the inventory card and general journal, right? If product costs are relating to the same shipment of inventory, and if they are based on different source documents, then they are recorded on the same row in the inventory card, given that they are on the same date.
Wait, they have different sources. How can they record?
How can they?
How can they record in the same or they have different sources?
If they have separate different source documents, how can they?
They record in the same row.
Same row, yeah, we can record.
Oh.
Because why? Let's say you purchase inventory from Harvey Norman, and then we get it delivered from a courier service, right? Let's say DHL, then or Australia Post, then we will have two different source documents, but same transaction. Why? Because cartage in will be a product cost, right? And then supplies price also will be a product cost. Then we are going to combine them.
Which source document do you use?
Which source document? You can tell me the source document.
Supply.
Yeah, so supply maybe if it is an invoice, you can say invoice slash EFT or whatever it is, or maybe another invoice for the courier or the cartage. Yeah, we can combine them. So your question is about combining them, yes? Yeah, no, you can confirm. Okay, next one, guys. If the product costs are from the same shipment of inventory, and they are supported by different source documents, but on different days. Then they can be recorded on the same row. However, the same quantity of inventory should be applied by increasing with its unitary price. Right. This one, question number 2, I'll show you in the inventory card. Right. Third one, if the product costs are from different source documents, they are recorded with separate journal entries in the general journal. So for in the general journal, guys, can we combine them? The source documents, even if they are product costs, if they are different source document, if it is from the same supplier, no problem, right? Then we will have only one source document. If they are supported by two separate source documents, can we combine them again in the general journal? No. Why? What is the rule for the general journal entry? For each source document, we have to have a different set of double entry. Make sense? Yeah. If we have two different source documents, we'll have to have two sets of double entries. If we have three sets of double entries, and so on. For each source document, we need to have a separate double entry. Right? We can't combine it, hence we combine it in the inventory card. Okay. Do you want to read that part or did you get it? You want me to explain further? Okay, next heading is reporting product costs. Right? Right? Product costs are reported as, what is it? We already discussed. Cost of sales in the income statement. Also, product costs are recorded in the inventory ledger account. Right? Okay. Now, I hope you have read this 1, 2, 3 in reporting product cost. Right? I'll use an example in the inventory and in the textbook. Please read this example. Done reading? Yeah. Okay, guys. Now do you get this one? So McCoy, how is that? Well, golf gear purchase 15 bags, 15 golf bags from Bear Industries, invoice 361. So what's the purchase supplier's price? 190 each, right? 190 times 15, 2850. Then cartaging, 150. Altogether, how much is the total invoice price? 3000. Then plus GST, the entire the total invoice price is going to be 300. So all of these costs are supported by one source document, invoice 361. Okay. Now, my question. What are the product costs here and what are the period costs? Only product cost, no period cost. Why? Because this definitely I told you, supplier's price is the product cost. Regardless, in wherever the level you are going to do it, in the uni or masters, whatever it is, you are going to deal with this one as a product cost. Then cartaging, in this case, guys, what is it? Product cost as well. Why? Because we have purchased 15 bags. For the 15 bags, right? We have paid 150, probably $10 each, right? Then we are going to identify it as a product cost. Okay?
Wait, what if the cartage in was just like a van? Like it's not like per bag you pay $15. You just like hire a van no matter like if you're bringing in like one or like 5. Like here,
You are, yeah. Tell me.
here
Keep going.
you're bringing 15 bags and you're paying $10 each. So like it's allocated to each unit of inventory, yeah. But what if you're just hiring a van, like no matter like what they like how much?
Okay. Yeah. That's a good point as well. Then what do you think? Let's say the higher, tell me the higher of a van, I don't know. Higher of a van, how much? Not 150, yes, you are saying? This is not 150, right? Then let's say we pay 200, right? Not 150, we pay 200, yes?
Yeah.
Then what will happen?
Period cost.
Is product cost or period? Period. Why is it period?
Because it's not allocated to each individual.
How? But we have paid the 200 only for the golf bags.
Yeah.
Let's say we get it through maybe Uber or something. We
Yeah.
pay 200, yes?
Yeah.
Then still, it's product cost. Why? Because we have paid that whatever the cartaging cost just for that shipment of inventory.
Yeah, that's all of them there.
Yeah, all of them.
Individually.
Yeah, like the way we pay, way we settle is not really important as long as we can logically allocate into individual things. Make sense? If you are going to tell me, let's say we paid 200 for golf bags and golf sticks and golf balls, so different products, then no. Why? Then it is a dilemma, right? Still we can allocate, but probably we can identify it as a period cost. Why? Because we can't logically allocate. Why? Because maybe the space is different, right? It is maybe like heavy or whatever it is, I don't know. Right? So it is different, yes. Makes sense? Let's say in a container we are bringing motor vehicles and books. Right? We paid for one shipment or one container, we are bringing different products. Then we can't allocate. Yes. Makes sense?
So we're deliberately allocating the cartage in price to each individual.
Not deliberately, as long as we can do it using a logical basis. If we can't figure out a logical basis, then no. Then not period cost.
But what would be like the illogical basis?
Yes. Yes, basically the logical basis mostly, Varun, if we have different products with different prices, yes. Let's say we are purchasing red golf bags and white golf bags, are then only the color is different, same product, yes? Are then no problem. Yeah, because then they are anyway like same size, same price, right? Same weight, no problem. But if they are different, totally different products, then we can't.
So then we put it as a period cost.
Then we put as a period cost, the cartaging. Yeah? Did I answer your question?
Yeah.
Okay, guys. Now we come back to the story, right? Right. Now we have paid 190 each for 15 bags, right? Cartage in 150, $10 each, right? Okay, totally 3,000, right? That means how much is the cost per unit? 200, yes. Why? You can do it in two ways. 2850, we have paid 190 each, and then 150 you divide by 10, sorry, 15 becomes 10, then you add 10 here, becomes 200. Otherwise, 3,000, we have paid totally 3,000. 3,000 divided by the number of units, which is 15, still you get 200. Same thing. Okay. Now, what I promise you is, I'm going to show you how to record it in the. So, what's the double entry for this 3,000, guys? Debit inventory, debit GST clearing 300, and credit the accounts payable. Why? Because it is supported by an invoice. So it's a credit transaction, not bad. Right? Okay. Then, next one. Yeah, this is how we are going to show it in the inventory card base. So we purchased on the April 15th, invoice 361, quantity is 15, cost is 200 per unit. How did we get this one? 190 plus 10, then 3,000, then the rest is normal. Any questions? Right? Okay, now we go to the second condition. Second, actually, situation. This one. Right. Now see. Again, read the question, guys. It looks like the same as, and not the same. Credit? What's the difference? Eric, the first scenario and this one. Oh, no difference. Delivery, yes. No, for the previous one also we paid GST, didn't we? Yeah. So see the total is 2,850 plus 150, 3,000. Oh, entire thing we paid GST, not only 2,850. Yeah. Make sense? No, not that. What else? Yes, two different source documents, guys. Why? Because see, Bear Industries issuing us annual invoice 361, but what is happening? The delivery is done. This inventory was delivered by Green Circle Delivery Company, EFT payment. Still 150 is the cost. Right? The second scenario is, earlier what happened, guys? Bear Industries themselves delivered the inventory to us. But this time, we get it done by a delivery service. So then two different source tokens. Previous one, only one. We had only invoice 361. This one, we have two source tokens. Then what are we going to do? Firstly, we'll deal with the inventory. Now, is it on the same day, guys?
Yeah.
Yes. Right, it's on the same day. If it is on the same day, then this is what Pranav was. Now we are going to combine. Two source tokens. Right? Then we have 200. Why 200, guys? Again, the same story. Because we had 150 here. We got delivered 15 units, so $10 each. 10 plus this 285. Sorry. Oh, 90, yeah. Yeah, 190 plus this 10. 200. Right? This 200. is the inventory per unit, which is what cost, guys? Product or period? Product cost. Both of them are still product. Right? So the only difference is we combine it in the inventory card. But unfortunately, we can't do it in the general journal. Then general journal, we had run two different sets of double entries. Make sense? Yeah. So for the invoice, guys, we have inventory 2850 plus 285, 3135. That's paying to the industries account payable. And then the other one is we paid in EFT cash. So then still we are debiting to the inventory account. See? So inventory account get debited anyway. How much? 3000 on both the scenarios. Good. Any questions? Yeah. Okay. Last one, guys. I mean, if you want to see the ledger account, this is how it look like. We have to do. We have to separate. We have recorded in two different rows as well in the ledger account. Why? Because they are two different and double entries. We can't combine. Okay. We can't say accounts payable / bank. No. Okay. Right. Then guys, next one. Right. Please read this part. This is the third scenario. Okay. Okay. What's the difference here, guys?
Different day.
Sorry? Different days. Same thing like the previous one, second scenario. Still, I mean, they are on two different dates. We purchased it on the 15th, but we got it delivered on the 17th. Right? Then what do? Then unfortunately we can't combine them. See, earlier we combine it. Yes. Why? Because they were on the same day. You want me to show it? Right? We combine it here because they were on the same date. But now we can't do it. We have to record on two different days. But the interesting thing is, right? Remember what I gave you in the note? Interesting thing is, guys, these are not two items. Don't identify them as two items. They are the same item, right? Relating to this 15. Then see, when you record this one, you record 15 at 190. So when you got the other one, you will add this $10 to 190, and then you are saying 200 here. It is not another set of inventory which is purchased at 10. It's the same thing, but we are adding it to the previous one. So remember, I gave you in the note, we increase the inventory price to 200 from 190. Yeah.
How do we know which one to like buy to? Will that question tell us?
Yes, if they are, so three different scenarios, Telugu. If the delivery was done by the same company, like from the same account payable, then we will, it's easy, our life is easy. If they were given two different source documents but the same day, what do you do? you will combine them, right? Invoice slash EFT. But the third scenario is two different source documents, but two different dates. Then we can't combine. Then we have recorded as this.
Like, what if there's like multiple inventory with the same quantity but different cost price? So how do you know which one?
Okay. Then you can figure it out, because as it was given in the question, you can figure it out for which shipment it is applied. That's what you're asking. Yeah. Don't worry about that.
Why can't you just combine?
Yeah, we don't combine them in recording. Because why two different dates? That's the problem.
Does it like affect decision making that much?
No, because why? This is for internal.
Yeah.
This one we are doing it internal. Yeah, you don't have to. Yeah, it can affect, but not much. It's not that important. Okay, so all of these are guys product cost. Then, what about the double entry? Still no problem. Two sets of double entries, but in two different dates. Okay, any questions with product cost? Yeah, then we'll do the period cost, guys. Period cost is not that long. Right. Okay. Now, double entries for the period cost, guys. Period cost, what will happen? Debit the particular period cost, correct. For example, cartage-in, freight-in, customs duty, right? Delivery, now is it? Delivery, the same thing, freight-in. Yeah.
You said cartage-in is product cost.
Did I say product cost? That's a good question, Ali. Did I say cartage-in is a product
It's
cost?
like a bunch of different inventories in like one.
Yeah, now this is what I gave you, and this is the note. Did I say cartage-in product cost?
It can be both. Only supply.
It can be both. Correct. It can be both. So remember I told you when I was saying, I gave you only two definite examples. If you were sure. Supplier's price will be definitely a product cost. Insurance of inventory will be definitely a period cost. All the others, these ones. Freight-in, cartage-in, modification, customs duty, any other buying expense can be in. Can be the product or period. What's the condition? As long as we can or we cannot identify them as an individual unit. That's it.
Like, how could modification be period?
Modification can be period cost, because if you can't identify per unit basis,
Yeah, but like you're the one doing the modification.
no, you are the one means like business is doing. Let's say we are modifying cars, right?
Yeah.
So we do shipment of cars to a modifier or somebody who is doing it to do it. So then maybe he's charging per unit basis or periodic, which we don't know.
Yeah.
Yeah. So I never told you cartage is also product. Did I tell you? No. I didn't tell. Right. Okay, guys. Right. So then, yeah, that's good, because you have to ask questions and then figure out the concept. All right. So double entry for period cost, guys. The particular period cost, right, is debited. Okay, next one is guys recording and reporting period costs, right? So we are reporting period cost under the cost of goods sold. After cost of sales in the income statement. Also, period cost have their respective ledger account. The next point, guys, if period costs are under the same source document along with product costs, the product costs are debited to the inventory account, while period costs are debited to their particular or the respective ledger account. Does that make sense?
When there's like, when you price inventory, there's like one of them is a product cost, one of them is a good.
Correct. In the same source document, guys, there can be both product and period costs, right? Okay. That of course I'll show you. Yeah, this one. Look at this. Please read this one. Right, repeat. Ready? Can I ask a question?
Yeah.
Right. Now, what is this? What is the problem here, guys? So from the same supplier, we have purchased two different products. Yes, shirts and hats, and also they have different cost prices, right? And for both the products, we have paid one cartaging. We have got one courier, or maybe like I think the same supplier is delivering us. There's only one cartaging cost, right? Then what can we do? Cartaging. Now, can it be a product cost? No. This time there's a problem. We can't. So we have 30 units, 20 shirts and 10 hats. Two different, we can't compare them, right? So 20 shirts and 10 hats. So then definitely we can't, we can't actually allocate this cartaging into individual units because there are different products. So then we can't. If we have different products, guys, we can't. Right? But let's say, imagine this, like both of them are shirts, golf like shirts, different colors, then you can, no problem. Right? Because it's the same size, maybe same price as well. Yeah. But these are two different products, so that we can't logically allocate into individual units this cartaging. As a result, cartaging will be a period cost. What will be the double entry? Debit inventory, how much?
140.
Yes, 540, addition of 460 and 80. These two. So debit the inventory 540, then debit cartage in 50 and credit the GST. Sorry, debit the GST, not credit, debit GST 59, right? Then you credit the accounts payable. Yeah, then we'll have two separate inventory cards. Why? Because they are two different products, right?
Wait, do you know when they calculate shipping?
Come again?
When they calculate like shipping and stuff, it's
Yeah.
not based on the weight and stuff.
Based on the weight. Probably, I think, based on the space.
So how much space is in the compartment?
That I don't know, because like if it is bulky, you can take one container. Containers are also of two types, 20 feet and 40 feet, right? So then it depends.
Okay.
The rest, shipping costs, actually, I don't know.
So if the shed.
Actually, they are really expensive. Yeah. Yeah. Yes.
Because the sheds like take up more space and have,
Hmm.
but like they would have more shipping than us.
Yeah.
Than us. So that's why
Yeah.
I can't like.
Yeah.
Allocate it.
Yeah. Yeah. But don't worry about that one. The spacing or anything. Don't worry. Yeah. What I was going to tell you guys, we'll have two different inventory cards. Even if both the items were shirts and two different colors, still we will have two different inventory cards. Make sense? Yeah. Yeah. Four different sizes. Different. We have discussed that before. Different sizes, different colors. We will have different inventory cards, even if they are in the same inventory line. Yeah. Okay. Then guys, what's the double entry? This is the one we discussed. Inventory debit 540, debit cartage in, debit GST. Why do we debit inventory? Because it's an asset increase, cartage in, expense increase, debit, GST clearing, a liability decreases, and finally accounts payable created, another liability increases. Any questions?
What's narration?
Narration will be purchasing, quick purchase of inventory, golf shirts and hats.
So you don't have to mention the college in the word.
No. If you want, you can say like with cartage in. And also you don't need this much information. Okay, you don't have say 20 golf shirt and blah blah blah. It's like too much. Okay. Okay, guys. Then yeah, any questions with this? This is where what did we do this one? In the same source document, we will have both cartage in and we will have both product cost and period cost. If it is product cost, it's going to the inventory card, inventory account, and period cost, the particular inventory, particular period cost, right, or the expense, right. Qualitative characteristics and assumptions relating to period cost. No, before that, shall we do a question? Oh no, I have to give you the thing, yes, okay. Quickly take it down, guys. Characteristics, relevance. Number two, accrual basis. Sorry, guys. Before that, shall we write faithful representation as well? Next one, accrual basis. I'm giving you the characteristics and assumptions together, okay? Accrual basis assumption and period assumption. Right. The comparison part I will explain you later because otherwise it will be too much theory, right? This part definitely coming to the exam, right? Okay, please read the question number one. We'll do it together. You don't have to work out anything. Just I asked you to read. Theory questions, theory answers I'll give you. Right, read. Done reading. Right, now what is this one? Denzel Washington has stopped acting. He's now washing machine. He's selling washing machines, yes? Okay. Now, what is the story? Invoice price is 900 per unit. Okay. Freighting 10% of the invoice price. Modification cost 25 per unit and insurance of inventory 400 per month. Now, for a moment, I'm going to cross this one out. Imagine this one wasn't there. Then, how would you treat it as insurance of inventory? Why is it period cost?
Because it's not allocated.
How do you know?
So,
Yes, remember in the note, guys, I gave you, yes? What did I give you? See? See? Any cost that is based on periodic basis, right? Is a, what is it? Period cost. Okay? Now see, I have given you the notes, guys, very clearly. Right? Check if your school does like this. I bet. Nobody does like this. This is clear. Okay? I'm not boasting myself. I'm just letting you know. So you have to learn it from, very, very well. Right? If you get any question on this one, you can smash it. That's it. That's the point. Okay? I have given you all the theory, all the concepts, break down into parts, very clear. Right? Okay. Now, yeah, even if they didn't tell you this one, probably they wouldn't tell you in the, I think this one was BC question. They won't tell you, right, the first bullet point. That means you have to figure it out that it is a period cost. Okay, why? Because it's per month. Right? Okay. Can you do part C? Can you try? If you are not sure, you can do it in a different place, right? You don't have to do necessarily, otherwise you try with the pencil. Done, madam?
since now.
Done? Yeah. Yeah, do the workings. Because even if your finance is wrong, still you get some ones. Now, did you do it now? Yeah, 900 plus. It's 90. Good. All of you, most of you have got the answer. Yes, you are correct. 1015, yes. So how much is invoice price? 900 plus freighting 90 plus modification, yes. 25, wasn't it? 1015. Right? Okay. Do you want to try part D? You okay? Yeah. Sorry, no, I forgot to mention. Chin up. Yes, you okay? Yeah. Okay. This was, yeah, this one I have there. So document reference. That should be this one. Zone 6 in-house. Yeah, this one. Yeah, because no, this one is different. Insurance is not a period product cost. Okay, guys, yeah. All of you have done correctly. Only thing, some of you have mixed up with the source document, okay? Source document is, what's the date? November 6th is. November 6th. Invoice, not the EFT. EFT is for the insurance, which is a period cost. Right, quantity is 40. We don't have an opening balance. 1015. And then balance also same thing. Okay, guys. Part D is done. Part E. You want to try the part E? Third generation, guys. Because it doesn't say not required. Yes. Include DST. Because it's DST also derivative. You need the narration. I told you. Narration is required. Why? See? It doesn't say not required. If it say not required, it just insurance. Yeah. No, no. It would be. This is wrong. You have this one, you have written the limit price. How much is the total? Oh, yeah. This is wrong. Remember, if you are not sure, guys, you don't have pencil. Yeah, if you are not sure, try with the pencil, okay? So. Anybody has this pencil? Yeah. Anybody has this pencil? Yeah. Yeah, you have to bring a pencil, guys, okay? If you're not sure, because like you might end up in writing the wrong values. Give it to him, this one. Okay, guys. Right, what's the double entry? Yeah. Some of you have confused with the amounts, right? November 6th. So which one are we recording? November 6th. What's the transaction on the November 6th? Denzel purchased 40 washing machines and paid 400, right? Which is, these are the details. Those are the purchasing details, right? Because why they had in the second bullet point it says only the quantity. Where are the prices? Here. Okay, right. And some of you have recorded the unit price only. No, remember the total price, right? So how much is the total price, guys? You are debiting firstly inventory. Yep. How much? 40,600. How did you get it? What I'm writing in the brackets, you don't have to do in the exam, okay? Just for your information. 1015 times by 40. Or otherwise, which is telling me this one. Or actually this one. Yeah. So what I have written in black, you don't have to do. Right. Next one, you are debiting GST clearing. 10% of this one, and then you're crediting. Make sure some of you have not written like this. Leave some space, guys. Right? I have asked you. Right? Like you press the tab for the credit entry. Nothing wrong, but it looks better. Accounts payable, what's their name? Sorry? Yeah, Young Bros. Yeah. Right? So then you get the total 44,660. Then do we have to write the narration? Yeah, some of you have forgotten the narration. Right? What is it, guys? The narration? Credit purchase of? Yep. Washing machines. Invoice. What is the invoice? 23. Right? Okay. Number 6. Is that all? No. Why? There is another one. Right? What is it? The insurance. Paid 400 insurance. What's the double entry for that? Debit insurance of inventory. Debit insurance of inventory. So do we have to write the date again? Yes. Number 6. Right? Right. So then, insurance of inventory, not just insurance, because that insurance can be insurance of the premises. This is insurance of inventory. This is a different one. We'll have 2 different ledger accounts for insurance and insurance of inventory, guys. Then you are debiting GST clearing. How much is insurance of inventory? 400. GST is 40. You credit where? Where do you credit? Accounts payable? Bank. So it's a bank purchase. How do we know it's a bank purchase? EFT. Yep. Good. EFT. So then 440. Then you have to. What's the narration, guys? Yep. Trade insurance for inventory. EFT 142, yes. Yep.
But do we assume that GST
Come again? Yeah, there is GST everywhere, guys. Right? As long as it is like the things, obvious things, we don't have GST, of course, like, interest and things like that. But This ones we have GST. Yeah, even the previous one we didn't have GST, did we? Yeah, in the first set inventory. Again, they didn't mention about inventory. It's a GST. And still we have GST, yes? Okay, do you want to try part F? Sound that the GST should be coming before that. Yeah. For example, this one only what you can solve. That's not all. Okay.
As in for.
For only what you have sold, you have got entire shipment as cost of sales. Only for the units what you sold. That's the cost of sales. Because inventory will be converted to cost of sales only when you sold it. So how many units did they sell? 25. Okay, guys. Now what's the question? Calculate the gross profit, right? Okay. They are just asking for the gross profit, so we don't have to write in all of them details, but for uh, uh, information purposes, I'll write it. How much is the sales, guys? How many units did they sell? 25 at 2500 each. So that 2500 times by 2500 is the selling price, right? This is the selling price. This is the quantity, right? So then I'm getting 62, 625, 62, 500. Yep. Okay. Then next one is cost of goods sold, right? We have how many parts, guys? Cost of goods sold. We have cost of sales. Yep. Cost of sales. What's the story? How many units? Again, 25. Cost of sales 25. What is unit price? 1015, yes. All right, somewhere here. 62,500. $25,375. 25,375, and then you are adding insurance. Yep. How much? 400. So that becomes a period cost regardless, right? Period cost, entire thing will be treated as period cost. 25,775. Then how much is the gross profit, guys? 25. 36,725 is the gross profit. Okay. Then you have to take a break. Yeah. Before you go to the break, now we're going to do the next extra class. Oh, you want to decide on Sunday? Because some students are not there, yes? Yeah, so. You are good time, we're not coming on Sunday, yes? When do you want to do the next extra class? Monday. Yeah, what time? Monday, it's okay? Yeah. You can come on Monday? Okay. Morning? No. Right.
We'll come Monday.
You can come Monday? Alright. You can't come either, okay, there are some people who come. Right. Then Tuesday. Huh? Sorry? You start school, okay.
Let's just have like a big class on Sunday.
6 hours.
6 hours.
Nah, it's not that fun. 6 hours too.
It's full school day.
Yeah, and I have classes before you. Then Tuesday you have school, yeah? Others, how about on Tuesday? Yeah? You guys okay? Tuesday.
Sign no day for school.
So? That's not an excuse. Even he has school on Tuesday. He is okay. Tuesday, you okay? Okay. Okay. You okay?
I'm not sure. I don't like.
Okay.
I'll just see if anyone can drop me.
If you want, I can pick you up.
I'll have to ask parents.
Okay, yeah, because then you're coming on that way. Yeah, anybody who has a problem, transport, I'm coming from Berwick to here. Right? Sorry? Cartage in, yes. I have to charge separately, yes. Cartage in and cartage out. Okay. Yeah. Alright. So Tuesday, okay, others?
Wait, what time?
Timing, I don't mind. We're basically in the morning, yes, morning is good. Yeah. Tuesday is okay. Wednesday?
No.
No, you have school. Then you have to be the Monday or Tuesday. You can't do on Tuesday, is it? You can come Sunday? Not sure. Alright. Okay, then we'll decide on Sunday. Because some people are not here. You are okay to come, yes? On weekdays, even though you start school? Okay, alright, that means definitely Monday or Tuesday. Otherwise, you have to postpone it.
Monday is a public holiday.
Yes, public holiday. Monday is a public holiday. Right? So it's Australia Day. Yes, our day. That's what then, yes. You can do Monday. Okay, then Monday. Most of you are good days. Who is not available on Monday?
Monday.
You okay, can do? Monday. I can check. Others okay on Monday? Alright, then we'll do a month. Okay, guys, you can have a break for 5 minutes, and then see, or you, if you want, you can take for 10 minutes. Okay, so we did the gross profit, and then now we can deal with the theory questions, right? Referring to one characteristic, explain why it is important that the cost price of inventory is calculated accurately. Why is it important for us to calculate the cost price? I gave you 3 reasons, yes? Yeah, but you don't have to write all 3 reasons. Right. Why is it important? Because, yeah, we can calculate the selling price, right? And also we can value the inventory, cost of sales, then gross net profit, right? So what do you think the characteristic is? Relevance, yeah. Take down the answer. Should I give any tutorials for anybody? You didn't text me. Can you text me?
Yeah.
If Yeah, check 1 to 11. We are doing now 11. If anybody is missing any tute, let me know. Mostly I can print them. We are doing 12 next tute. Yeah, and I don't have, sorry, I didn't bring it actually today. It's not printed. I gave it to our typesetting girl, still I didn't get it back. So so you are coming next day, Monday. I'll give it to you on Monday. Yeah, anybody who is missing any tutes, please text me. Right? Okay, guys, part B. Explain why the modification cost should be treated as a product cost. So, did we treat modification as a product cost? Yes. Why? Why? Yes, they did. Why?
You can allocate the cost to each.
Yes. Yes. What's the full definition, guys, for the product cost? No, but not by looking at that.
Okay. The cost price incurred.
Yes, cost incurred to bring inventory into a condition or location. In this case, what is it? Condition or location? Modification is condition, yes.
Can be allocated.
That can be logically allocated into what? Individual units of inventory. Should you write the full definition? Yes. If you need the full marks, yes, please write the full definition. Right. Okay, guys, done. Everyone ready? Right, part D. Explain whether Denzel was correct in treating insurance of inventory as period cost. So why, first bullet point, Denzel is thinking to, yes, decided to treat the insurance as period cost. Yes, is it correct? Yep. Why is that?
Condition for getting ready to sell,
Yep.
cannot be allocated logically,
In the why can't we allocate it? So
on a periodic basis.
yes, it has been charged periodically. Very good. Please take down. Okay, guys. Done. Right. We'll go back to theory, the last theory part, and also this is the most important thing. As I told you, every time they're asking this question in VC, given that they give you a question on period cost, product period. Read the thing. Comparison between product and period costs. Refer to Tude. Let me know, guys, if you are done reading. Right? Okay. Now this is a summary. And also the comparison between product and period. So what's the difference between, guys, product and period? Right? All the product costs, what do we do? Before, imagine we haven't sold any inventory, it will be recorded in the inventory card and in inventory account, ledger account. Yeah. Right. Then the point starts, right? If the inventory has been sold or not, right? So identifying a particular cost as a product or period cost really affecting our decision making and our records and reports. If we have sold inventory or not, right? And then, guys, usually product cost, how do we identify product cost? Is mainly cost of sales. Yes, everything that is in the cost of sales is product cost, right? So we will identify a particular cost as product cost or cost of sales only when we have sold it, right? Then let's say we purchase a particular shipment of inventory in this month and then we sold it partially. That means only part of the cost price of the inventory or the product cost or the cost of sales will be converted into cost of sales, right? Then part of that inventory will be appearing in as closing inventory. Okay, right. Then the other story is if we have identified a particular cost as period cost, regardless of selling the entire shipment of inventory in that particular period or not, we will record and report it as an expense in that period. So we'll see what happened to the Denzel Washington. Yes, what happened? The insurance of inventory, entire amount. What did we do? Recorded and reported as a period cost, 400. Yes, in the question we did, right? And then how many items did he purchase? I think 40. Yes, from 40, how many did he sell? 25. So then only 25 times by the cost price per unit, 1015. Yeah, was became the actually cost of sales. But entire amount of the period cost, which is cost of insurance, became a cost, right? So then the point is, guys, if we are able to sell the entire shipment of inventory, identifying a particular cost as product or period cost doesn't really matter. Make sense? Yep. So if he could sell, if Denzel could sell the entire shipment of 40 washing machines in that month itself, doesn't matter whether he identified it as a product cost or period cost, no problem. Make sense? And the only problem is if the shipment was sold partially, that's where really the difference will be in the reports. Yes, sir?
Well, wouldn't there be a difference if you like marks it up? It's like if you put that cost into that and mark it up, would it still be the same as
mark it up.
like if it is like 40% markup
Yes.
compared to like period product cost?
Yeah, then marking setting the selling price will be a different story. We are just talking about the cost. Yeah. So whether probably usually what we do is we identify the per unit cost, then only we set up the markup because we don't identify the period cost to identify the markup. Why? Because it doesn't become a part of the cost. Part of the individual cost, unit cost, right? The others are basically period cost. But if it is significant, like let's say the period costs are also very expensive, then the seller has to identify, has to pay attention for the period cost as well, because otherwise he's going to make a loss. Yeah, your point is correct, practically correct. Right? Otherwise, in our study design, you don't have to worry about the period cost for setting up the markup, right? Right. Basically, Yeah, I'll give you an example, right? In the textbook. Okay, please read this question, guys. Okay. During October, they imported 10 sets of headphones, 120 each, incurred 350 plus GST in modification cost. So that 350, yeah, 350, what is it, guys? So modification cost, is it for the per unit or total? Total, yes, as according to your memory. Right? So this is total, guys. Modification cost 350 was total. And then how many did they sell? Only 4 sets out of 10. Right? Only 40% of the inventory was sold. Right. Selling price was 250. Now we are going to compare modification cost being treated as a product cost and period cost. Okay. Right. So let's say firstly we identify it as a product cost. Right. That means 35 per unit. As a result, unit cost of one headphone is 155. Supplies price 120, modification 35 per unit. Right? Then what do we do, guys? Then if we prepare the income statement, sales will be 4 times 250. This is the selling price, 1000. COGS will be just the 4 times 155. Okay? Then inventory item will be in the balance sheet, inventory is 6 times 155. Okay? Why? Because 155 is the per unit price. And this is also appearing in the inventory card. Right. Then imagine for a moment we identified the 350 as a period cost. Then what will happen? Then let's see the story. Sales will be the same, right? It doesn't really matter. Cost of sales will be 4 times 120 because now that 35 was not included here. Earlier, remember this one was 155, right? But now it is 120, just a supplies price. Modification cost was identified as a period cost. See, regardless of selling the entire shipment or not, for the period cost, we will identify the entire cost as a cost incurred in that particular period, right? In which we incurred. Then what happens? Our COGS becomes 830, right? Earlier, how much? Good number, 620, right? 620. Then our gross profit is 170, right? Earlier gross profit was 380. Right? Now it becomes 170. Now what is the story for the inventory, guys? 6 times 120. Earlier 930. Okay. However, if we put it into one statement, this is how we can compare. Right? However, guys, under period costing, we can see the gross profit is lower, but don't worry. When we go to the next period and when we sell it, we will catch that lost money next period. Right? So the point is, as I told you, now do you understand the story? Is it clear? Any questions with this? So the point, as I said, point is actually it is that if we are able to sell the entire shipment of inventory in that period, if we can do it, doesn't really matter whether we identify a particular cost as a productive period. If we couldn't sell only entire shipment, then only the costing is going to change. Right, so what's really the difference here, guys? 930 and 720. That is actually 210, yes? The difference between these two is how much? 210. 210 is for how many units? 6 units. That means 35. That is that modification cost. 35 times 6. You know? Same difference you can see here. Yep. What is the difference between these two? Same thing. Again, 210. Okay. All right, guys. Any questions? Right. Okay, we'll go to the. If you don't have questions, I'll give you a question. Question number 2. Theory questions, if you want, you can try, but I'll give you the answers. Firstly, you can try part A, C, yeah, mainly and C.
ANC.
Yeah. Yes. Both of them.
That one doesn't matter, no, right? Because you have to have big concept. You can just put yes, mission comes today because we don't know if it's cancer.
We usually put the cells.
Yes, yes, yes. Oh, no. 15? Let me see. Probably. You have to put it in the same other way.
Also for the white dance.
You can try it down in on that net, but probably in the losses. Yeah, and include the breaking as well. Yeah. Okay, guys. Right. I think most of you have done it correctly. There were some mistakes. Yeah. So in this case, guys, we have to incorporate the freight in. Make it freight in, guys. I saw some of you have written freight. Should be freight in, okay? Because it can be in a business, we can have freight in and out, so that you have to specify. Even though the invoice says freight, it should be freight in. Right? Because for the supplier, it's freight, right? So that it is recording it as freight, but we have to, ledger account will be freight in. Inventory, how much? You have to add both the type of inventory, why anyway gets recorded in the inventory account. You have to add them, 9300. And then you debit GST, no, before freight in. This is a different ledger account, guys. So why in this case, why is it product or period cost? Period cost, because there are two different types of inventory that we can't logically allocate this 300 into individual units. So freight in 300, and then for both of them we are paying GST, which is 960, and then you credit in the accounts payable, yes, because it's an, why is it accounts payable, guys? It's an invoice, right? wired. Right. So what's the narration, guys? Take purchase of solutions, invoice,
And when you start, it's few types of. It could choose an inventory instead.
oh yeah, we can say inventory as well. Okay, then television and what is it? Stereo. Invoice 201, yes. Right. Okay, guys. If you can do this one, that means you can. Yeah, you should be fine. Okay. Come again?
You have to mention the freight.
Yes, freighting, yes. Not really. It's fine. If you want, you can mention, but that's fine. Right. Okay, guys. Then part B. Referring to answer to part A, explain your treatment of freight. So how did we treat for freight? What treatment? Medical treatment? No, accounting treatment. Yes. Period cost. Yes. Why?
Because of the incorrect location.
Yeah, location ready for sale, but
It cannot be allocated to individual units of inventory on logical basis.
very good.
This shit doesn't come with it.
Yeah. Good. Okay, guys. Did you do part C? Right. So then, what is the story during April? 3 televisions were sold for 1320, including GST, and 2 stereo were sold 550 with GST. 1 television was written off. This one was written off. So what is it? Somebody asked me if it was inventory write down. What is it? Inventory write down or inventory loss? Loss. Inventory write down we haven't done as yet, right? Which is our next topic on Sunday, right? So we are writing it off, guys. Right? So it's a loss, right? Yeah, it has been dropped in the showroom. Maybe somebody wanted to check the quality, yes? Right? It was dropped. All right. Okay, guys. Then income statement, sales. We have sales as, sorry, firstly revenue. Under that, they haven't told us if it is credit or cash, then you can say just sales. What I'm writing in brackets, you don't have to worry. just for calculation, 3 times 1200. Why is it 1200? Without GST, and then how many units we sold? 2, yes. 2 stereos times by 500, right? So we don't consider GST here. So 4600. Right. Then how many did we sell? Sorry, cost of. So you can say less or minus cost of goods sold. Now, guys, we did another income statement in the previous question, but that one is not necessarily a income statement just to calculate gross profit. But this one, you should do the exact format of the income statement. Why? Because they have asked us to do the income statement. Prepare an income statement. But earlier, previous question, they just asked us to do the gross profit, yes? So then part F, we just did it roughly. This one was not necessarily income statement. It is, but not an official. So you don't have to worry, writing like this, even if I have even though I have written it. But this one, make sure you have right full format. Then the main cost of goods sold is cost of sales. So you need to get the cost, guys. How much is the cost for the television? 650, yes. Plus the other one was 300. 2 times 300, which is 2550. Right, 2550. No, it's here in the middle column. Right, because we have another item which is freighting. Freighting was 300. Right, then 2850. Then we are getting the gross profit. Which is 1750. Then take away inventory loss. How much was inventory loss, guys? 650, which is because they dropped the television. 650. So the adjusted gross profit is 1100. Okay. Any questions with this?
But do we have to like keep the space between like sales and cost of goods sold?
No. No. Okay, guys. Any questions with this? Good. Yeah. Part D. Explain how treating expenses as period cost instead of product cost lead to a lower profit. So this is exactly what I explained you, right? Can anybody can tell the answer for this?
So if it's, because it's a partial shipment, right, partial sales, that means that, since product cost of sales is calculated based on when the thing is sold. Cost of sales will be low.
Yep. Why? Because the point is that what is it? Period cost will be identified as identified as incurred in the period in which it was incurred, regardless of selling the entire shipment or not. So then, as a result, in this case, this one has been sold partially, so that the entire period cost will be absorbed as or will be reported as a cost incurred. So then it will increase the cost of goods, so that will decrease the gross profit or profit. Take down.
But like, just like. Wait.
Ah. Let me know if you are done. Done, guys. Okay, part E. Yeah, discuss whether it would have been ethical to sell the television that had been broken. Yes. Yeah, we check the quality. Yes. Drop in the television. Alright, so now we have to sell it. Yeah, what are we going to do, guys? If you are the owner. No? Yeah. Firstly, I have given a note how to answer ethical questions. Right? If somebody, I think, I don't know. If you haven't got it, ask me, I'll give you. This one was developed by myself, actually. You can answer any question, any ethical question in the study design. You won't have this one in the textbook, okay? Right. However, guys, right now, right. Sorry, where's the question? Yeah, party, discuss. They have dropped the television. How is it ethical to sell the television? Discuss. So discuss means what? Yeah, you can talk about both sides. Whether you Yes and no. You can say yes, you can say no. Right? So when for the discussion questions, guys, you can't just be partial. You have to talk about both sides. Yeah, if you are the owner, tell me.
Selling it will increase profit.
Selling the increase profit, very good. Yes.
Or to give a discount to the dilution.
Very good. Interesting. Discount can be given, right? Then we can inform them, right? We can tell the customer, look, we have checked the quality. Wonderful. No, we have to tell them, yes, this was damaged, and then, yes, if they are happy, they can purchase, right? Yes, what else?
Good luck. The bad thing could be,
Yeah, he's going to sell it, yes. You're saying the bad thing and sell it.
yeah. You could jeopardize reputation.
Very good, excellent. So, let's say we sold it, yes, now be careful, yes, your reputation can be jeopardized, yes, can be gone, can be damaged. So then, we can sell it, increase the profit, but our reputation can be affected, right? Okay, take down. Okay, I'll give the answer. Yeah, however, guys, like technically, it is unethical to sell the drop one. Yes, they have to bear the loss. I mean, they have to probably they can get it from the insurance or anything, but we can sell it. Kind of unethical, yes.
Yeah.
Yeah. Because that's how they have given us in the question. Oh no, television. Yeah, then write television. But doesn't really matter. It's not a big deal, I think. Better to write television. However, you can write here TV in brackets. JD. You can write here brackets TV. Then after that you can refer TV. Okay, guys. Then yeah. The last question. Yeah, everyone done? Okay. Okay. Question 3. I think this is also a VC question, as I remember. You can do. Yeah, you have to try part A, but you don't have to write the answer. You have to think about it. You can do part B, D, and E. If you have any question, this one is, there are some concepts such as, account management fee and blah, blah. Yeah, if you have any problems, ask me, I can help you. I have some questions when I'm reading this. Okay, this is a VC question, as I told you. I'm 99% sure VC question. Right, I have a problem, guys. Sorry? Pre-delivery. Okay. My question is, okay, supplier's invoice price, right? Right. Now this one, is it the total or the per unit price? Per unit or the total? This price, these prices? Some people say total, some people say per unit. Sorry? Total. Okay. Any other answers? Yes, you are saying unit price. Yes, sorry. Yeah, because these are practical questions when you are going to do it, yes? Yeah, this is the question that I got. That's why I'm asking. When I read this one, yeah. Because I can't remember the question. Yeah, Nosser says total. Right? Melbourne High says individual, I mean unit price. Yeah, what about others? Yeah, yes, Harry. So total. Yeah, this is total, yes. This one is total. Why? So diving goggles in shipment of 100 units. So they are purchasing in the shipments of 100. This one is for how many units then? 100 units, yes? Yep. Okay, now you can go ahead.
Okay, so we part B and part B.
Basically, I asked you to do the calculation, I mean, the working out part B, D, and E. But you have to, I'm asking you the answer for A as well, okay? Sorry? Briefly. And
So
I,
is that next week being a
do you take mine? So, what did you say? 80. How did you on it?
There's also.
How much?
It takes 86. The new routes will go.
No,
I'll say something like. No, it's not great. They're so it's.
is
Numerical chance.
indirectly charging. Yeah, but this one, what do you think? The 9. Indirectly charging, yes, can be. It's included in the selling price. Right? But how you dealing with the selling price is,
Oh no, that's right.
so why don't you take that 9?
That's not involved with the present virus and cancel. What is the coverage? But regarding that was like all the traction.
Yeah, sure, okay.
Yeah, that's so handling it.
Isn't it waste?
No, I also, what is it?
Or you,
Yeah.
you know, on people, no, not killing someone.
Yeah, this one's, you're taking, yeah, right? So however you can take, you can reverse them up, 100 days or later.
Yeah.
But 150 or 150. Why is that? Because this is this one product, this is period, right? It's given period is the terms. And this one, would you take 9 per unit? Wow. But not today, why? Yeah, because, yes, very good. Wonderful. Yeah. Okay, guys, I think most of you have done it correctly. Some mistakes here and there. All right. Now, part A. We'll start with part A. Or shall we do part B?
You can log in if you want to. If I will try to contact you next
BOB.
Tuesday or Thursday about
Right. Now the story. Yeah, we'll start with part B, yes. Right. Calculate the cost price of each pair. Right. Now guys, this is an excellent question. You know the reason? Now listen. Yeah, can you stop your class, please? And now listen, right? I gave you time to discuss and do. All right. Now this one, interesting question, excellent question. You know the reason? This one is trying to trick you. If you are smart enough, you shouldn't get tricked. Yeah, that's the examiner's role, right? Or even when I design a question, I do the same thing, right? So I go into examiner's boots, then I do the question, right? Try to trick you. This is something tricking. Cost of delivery to customers. What is it? Per 9 per unit. That per unit we can calculate. Wonderful. Then what do? You add it to the cost of the product, yes, or product cost? No. Why not? Because it is out. We are sending it out to the customer. So we are not going to add it. Why? It is not a cost incurred to bring the inventory into a condition or location ready for sale. It is incurred after the inventory was sold. Right? So that we don't add it. Okay?
So, this under the income statement, you recorded like under other expenses.
Under other expenses, correct. Cartage out is an other expense, correct. Right? Next one. Part A is asking, what is it? Accountant has decided to treat the cost of attaching as a period cost. Why is that? Okay, let's say they didn't give it to you like this. Why wouldn't you add it as a period cost?
That's 1%.
Now this is what I told you. 1%, yes. How do you calculate 1% now? You can do it in two ways. 80 divided by 9,000 times by 100. Yes, what's the percentage? 9 goes with 9. 8.89. No, 89 or actually 89%. Yes. Sorry, my bad. 0.89%. Not 89%. 0.89%. Right. Okay, 0.89%, guys, which is what is the condition then? This is less than 1%. This is the condition. And however, what do we say? Because this is less than 1%, this is a period cost. Is that what we are writing? No. Remember what I told you? I told you not to write that 1% thing. Yes, don't write 1% because my tutor said 1%. Yeah, don't write like that. Okay. Right. So this is for your information, right? Do not write this in the exam. Just for your information, for you to figure out if it is material or not. Okay. Right. Now, if you this is like in total, but if you want, you can calculate per unit basis as well. How? So 80 divided by 100. How much is it, Terry? 8? No. 0.8. Okay. So then you are dividing 0.8 by how much? 90. Why 90? 900 divided by 9,000 divided by 100. 90. Still, you get the how much? 0.89%. Less than 1%. Okay, regardless, you get the same. Okay, now let's write the part A, guys. Oh, where shall we do part B first? A. Okay, discuss the accountant's decision. Right, we are going to discuss cost of this is condition, yes. What?
Where relevance.
Where relevance leads. Okay, so we are talking about both sides, guys. Why? Discuss. Yes, part A is asking discussing. Right. Then next one, we can do part B. I think most of you have got it. So you can do 2 ways, guys. They're asking what is it, cost per unit, yes? What you can do is you can do 9,000 plus 1,600, right? This one is cartage in, guys. Packaging and delivery cartage in 1,600. That's all, yes. Others are not. Account management fee is, what is this account management fee? Yeah, total is 10,600. You divide by 100, you'll get 106. Otherwise, you can do 90 plus 16. Still, you get 106. Right. Make sure you do the workings, okay? Right. What is this account management fee, guys? Account management fee. Yeah. So that means the supplier is charging on the account receivable. So for maintaining their account or the customership, whatever it is, they are charging a price from the customer. Account management fee. Right. Probably providing the goods on credit or something, they are charging some price. Part C, explain your treatment of the account management fee. What is account management fee, guys? Yeah. Period cost, yes. Why? Okay, guys. Then how many units have been sold? 30, yes. During July 31st, everyone done writing? Yeah. How many units have been sold? 30, yes. So then, we'll write here, guys, how much is sales? We have sold 30 units, yes. Times by, they are asking to calculate not sales. This is my bad. This is not sales, cost of sales, yes. They're asking us to calculate cost of sales. Cost of goods sold, actually. Cost of sales is how much? 30 times 106, yes. 3180. And then we have what else? Brand badges. Brand badges, how much? 80. And then account management fee, yes, is 150. Yep. That's it. 3410 is the cost of goods sold. Right. Good. Then part E, guys. Calculate the COGS if packaging and delivery had been treated as a period cost. Then what do we do? If the packaging and delivery had been treated as a period cost, that means what will happen? This 1600 or 16 will be taken out. Yes, that 16 will be taken out. Okay, then it will be just 90. Make sense? Then what we are going to do is, right, Cost of sales will be 30 times 90 only, not 106, which is 2700 plus the packaging and delivery. Delivery will be how much? 1600. Yes, 1600, and the rest will be the same, right? That is brand badges. Brand badges is 80, and then the other one is account management fee. Fee is 150. Then you're adding everything together. 15, 4, 5, 30. This is COGS.
Wait, Ron,
Yeah.
when you go to the example, how are you meant to know that the account management fee is the cost of goods sold for other expenses?
Yes, because that's why I explain you the meaning of that. So then, when how you can figure it out, you're asking like if it was identified as a product or period cost or other expense. Yeah. So this account management fee is charged by the supplier periodically for selling the goods from their perspective. So then you have to figure out if it is cost of inventory, right, or selling cost, right? If it is a cost of if it is inventory cost or selling cost, then what is it? Inventory cost. Why? Because it has been charged by the supplier for the sale of inventory from their perspective. Okay. Right? Okay. Any other question? Does that answer your question? Any other questions? Then last one, guys. Explain the effect of on the accounting equation if Pacific supplies of Pacific supplies if packaging and administrative asset period cost. Effect on the accounting equation. Then what will happen? Right? So what will happen, guys? Our inventory is basically it is affecting a few things. What is it affected? Cost of sales or cost of goods sold, and then profit, and then inventory. That's it. Okay. Yeah. So basically the difference is going to be 70 times. No, how many did we sell? Purchase 100, yeah? Yeah, 70 times 16 is going to be the difference. Right? Okay, shall we write it?
Wait, is it a GST?
What do you think? Do we have to consider GST?
This kind of equation.
Yes. So are we going to deal with are we going to absorb GST into the packaging cost and as a result, cost of goods sold and inventory? No. GST wouldn't be a matter. Okay. Why? Because GST we report separately. 1600 doesn't include GST, does it? No. Alright, guys. 70 times 16, yes? Which is 1120 is the problem. Right? So you can say assets would be, no, we won't say overstated or understated. Why? If it had been treated as a period cost, because overstate, understate, we are saying if there was an error. This is not an error. Because why? Deliberately we are picking it as a period.
So you can do that, you can just choose a period cost.
Yes, but it is not a mistake. It's not mistakenly done. We have done it deliberately, whichever it is. Right? Assets would be lower. Assets would be lower as inventory. is reported $120. That's right. Then no impact, no effect on liabilities, right? Why is that, guys? Because only liability would have been GST, but GST doesn't matter. Why? Because GST is treated regardless, GST will be decreasing. So no matter, no problem on the GST. Then owner's equity. Owner's equity would be lower by 1,120 because as the cost of goods sold would be higher by
Wait,
hold on. Cost of goods sold would be higher by 1,120. As the packaging cost was reported.
We mentioned that.
Was reported entirely. That reduces net profit by 120. Yeah. Okay, guys. Then we're going to go. Okay, so good. Yeah. Okay. Okay, guys. Thank you for coming today. Right. And I really appreciate your commitment. Also, your parents' commitment. Dropping you guys in the morning. And then because as I told you, our objective is to finish unit 3 as soon as possible, and then because you guys will be having tax, we want to get we want to do revision for the tax, right? So my plan was to finish off unit 3 completely because some schools do tax grande, so that anyway we are covered. So that and the best thing is we are leading your schools, so we have that, right? So we'll finish off this one, and next week we are doing event write down and entry residual value. Right, the last lesson of the inventory, then we are done. Not done with inventory, okay? I said we have a couple of cash flow income statement and our food detail. We'll see if you want to do the food as under inventory, otherwise if you want me to do it. Yeah, anyway, it's in the textbook under inventory, but it doesn't make sense, Yeah, because earlier in the previous design, it was under unit 4, and like because examiners want to do for the sake of changing something, they want to do something, they have shuffled it. It doesn't make sense. Okay, however, guys, yeah. And we'll see you on Sunday at 4:30, right? Sunday at 4:30.
Yes.